Hi, I'm Ben and welcome to Motivation to Invest. Our mission is to motivate you to invest for your financial freedom. Whether that means escaping the 9-to-5 drudgery or just improving your quality of life, I'm here to help you by providing you with valuable investing tips and strategies. Due to the recent global issue, which shall not be named, the economy has stalled and the stock market has taken a major hammering. Is the world about to end? Or is this the greatest time to invest in some bargain stocks? If you believe, like me, that the economy will recover as it has done so many times before from previous recessions, then now could be a great time for you to start investing. The stock price of Alphabet, the parent company of Google, has plummeted recently due to the global health crisis. After analysing the stock of Google, it was clear to see that this massive drop in share price was unjustified. As although Google's advertising business would take a major hit as people scale back spending, its other businesses still dominate the landscape. From the number of people using Google search to video conferencing software such as Google Hangouts, which has seen a boost in popularity as more people work from home. Even YouTube, what you're watching right now, is the second most popular social media platform on earth. Spotting this, I purchased shares in Google at over 30% below their calculated fair value. Now recently, Alphabet announced its Q1 earnings for 2020. They were better than expected. This caused the stock to rally by over 8%. Now many would say Alphabet stock is just too expensive to buy right now, similar to other tech giants such as Amazon and Microsoft. I would disagree. In this video, I'm going to discuss why I personally am still buying shares in Alphabet, the parent company of Google. I'm going to fully analyse the business, its competitors, where it is leading market share, and give you a full stock analysis. Let's dive in.
Coming in, flex. I just wanna win.
Before we get started, go ahead, smash that like button and subscribe if you haven't already. Be sure to turn the notification bell on, that way you'll get notified when I release future videos and stock picks. It's good to be first on the scene when an interesting stock is at a great price. Google is a powerhouse tech giant which has seen its share price skyrocket in the past 10 years. For example, if you purchased shares in Google back in 2010, they will be up by over 400% today. Now that beats the 0.5% interest in the bank. Now although Google's share price did plummet during the recent stock market crash, it didn't fall as much as some other companies, such as risky cruise line stocks, which fell by over 70%. To me, this makes perfect sense. Google is the #1 market leader in online advertising. So thus, as a recession hits, consumers will cut back spending, thus advertisers will cut back spending, and this will affect Google's bottom line. So I believe this should have caused the share price to drop, but not by as much as it did. I think the stock market overreacted. So to me, this was a great buying opportunity. And it still is. Now you may think that you have missed out on purchasing shares in Alphabet due to its recent stock market rally, but I'm still buying shares, and in this video I'm going to explain why. Firstly, Google is the dominant market leader in internet search, with a market share of over 90%. If you didn't know, just Google it. From its Google search to Google Images and of course YouTube, the world's largest video search engine and second largest social media platform. Countries such as China and Russia are the only ones which have not fully succumbed to the dominance of Google, as they have their own search engines there. However, Google is not just a market-leading search engine. Google Maps is also the #1 mobile mapping software, with its standard Google Maps and also Street View. Then there's Google Home. Google Home is making headway in the voice search and smart home market, second only to Amazon's Alexa, which has 52% market share. However, Loop Ventures have predicted Google Home to become the #1 smart speaker market leader by 2022. And let's not forget about Android. Google acquired Android all the way back in 2005. Android is now the #1 market leader in mobile phone operating systems. Android currently has 75% of the market share, with Apple's iOS having just 24%. Google licenses the software to all the major cell phone manufacturers, such as Samsung with their popular Galaxy smartphones and Huawei. Google also has its own series of impeccable smartphones, such as the Google Pixel. You should also notice when you Google Best Smartphone 2020, mostly Android devices show up. This is where Google has an immense competitive advantage as a big data leader. But wait, there's even more. Google's cloud software is making real headway, with its G Drive seeing a major jump in data storage. In addition to Google Hangouts, the video conferencing software, which has seen a major boost due to the multitudes of people working from home. The CEO thinks people will continue this trend. Although Google accounts for only 8% of the global cloud infrastructure market, this industry has grown massively and is currently worth $96 billion. The worldwide cloud services market grew by over 40% in 2009, and experts predict spending to increase at a compound growth rate of 22% between now and 2023. Then there is Google Classroom for students. This service is also experiencing major usage at scale. Oh, and did I mention autonomous vehicles? This is a rapidly growing industry, with self-driving cars and trucks expected to grow by over 60% from 2021 to 2030, according to an industry report by Grand View Research. So I know what you may be thinking, Ben, that all sounds great, but what about the stock itself and its numbers? So part 1 of this video, I gave you a brief outline of the qualitative aspects of Alphabet as a business. In part 2, I will discuss the quantitative factors. These are the cold, hard numbers, because that's what we're in this game for, right? Alphabet has a pristine balance sheet with over $121 billion in cash and just $4 billion in debt. With such a strong balance sheet, Alphabet will have no problem weathering the storm, and will even have enough spare cash on hand to invest into research and development, to build a moat around its current market lead and also create new innovative products. It can also use this excess cash to buy back shares, further boosting the share price for you guys. Despite its gigantic size, Alphabet has seen an increase in sales and maintained its healthy profit margin. It has averaged a profit margin of over 20% over the past 3 years. It's always a great sign to see a company which can grow its sales without sacrificing its profit margin. This indicates the company's products and services are holding their pricing power. In other words, it doesn't have to reduce prices in order to sell its products. Overall, Alphabet is a fantastic market-leading company in a variety of areas. Its collection of big data gives it a competitive advantage over other people in the marketplace. The stock's forward price to earnings ratio is just 25, which I believe is good value when you consider all the positives mentioned previously. For example, the S&P 500 has an average PE ratio of 16. Now, I would not say Alphabet is only slightly better than average. For example, Amazon is also an incredible company, but it also has an incredible valuation, with its price to earnings ratio currently at over 100. From all the factors mentioned previously, you can see why I've purchased shares in Alphabet and will continue to fill out my position in this stock. I will look out for situations where the stock price of Alphabet dips, and then I will buy hard. In the words of the great Warren Buffett, it's better to buy a great company at a fair price than a fair company at a great price. To me, Alphabet is a great company, and it's at a fair price. What do you think of Alphabet as a company and as a stock? Do you think anyone can challenge their dominance? I would love to know your thoughts, so So please do comment below. Check out my other videos where I analyse 5 stocks I purchased during the previous stock market crash, which has seen me up by £1,000 in just 7 days. Now, as a long-term investor, this increase doesn't really make a difference to me, but it's still nice to watch your portfolio grow over such a short period of time. This suggests a possible V-shaped recovery from this recession. I also have a video reviewing the free trading apps which make it really easy to get started investing. I've included a couple links below which will give you a free share when you sign up. But remember, on this channel we don't give financial advice. So please evaluate the stock yourself, research it yourself, assess your own investing goals and your own budget before investing into any stock we mention on this channel. And if you enjoyed this video, go ahead, smash that like button and definitely subscribe. See you next time.
Coming in, flex, I just wanna win.